idea about the benefits which we get in the long term and the long run and life of assets. After that, we had to give example like when we buy before the capitalization, we have to charge that capital work in progress, and after the capitalization, we will move that to reverse that. We will charge to machinery or the fixed asset, anything to that capital work in progress. And after the on the starting of the capitalization date also, we will charge the depreciation from that date itself. So we can follow two methods, straight line method and that return down value method. So that's the
And
idea about that.
how you're going to do the entry for each stage?
For depreciation,
For
from the
entire,
opening you were saying? Okay.
yeah, from purchase of the
Yeah.
asset to till charge the
Okay.
depreciation.
So when we purchase the asset, we will charge to that capital work in progress account attached to that vendor. It means before the capitalization, all the expenses and everything, we will charge to that capital work in progress. If we have any like transportation, so we will again charge to that capital work in progress to vendor, and again any installation also before the capitalization we will do like that. And after the capitalization, we will move the entire things. If we are buying a machinery, it's like machinery account attached to that capital work in progress. The entire amount, it means that invoice value plus that transportation plus that any installation, everything will goes to that machinery account attached to capital work in progress. So after that, when we charging the depreciation, that will be the depreciation account attached to that that accumulated depreciation account.
Right.
So every month, so every month we will charge depreciation, right?
Yes.
So we have to charge this entry, and after the when the value of the asset, it's at the end of the year, we will just reverse that like uh, accumulated depreciation to that fixed asset account.
Hmm.
That is the idea.
Okay. So that's there. So whenever if such kind of questions is there, and
Mhm.
if now the as we already mentioned that now the way of asking the questions is already changed. Nobody want
Mhm.
to ask the questions in bits and pieces. It's a straightforward one combined questions going to ask to
Mhm.
analyze how depth you have the knowledge about that particular concept. The here as well the
I think
same.
this pattern is better because like it's like pieces. If we don't know that piece, we cannot explain. We have to do something. If it's a one thing and one question that about the more pieces, we can explain two or three pieces at least.
Yes. So to avoid that, that's a smart move. Now the interviewer asking this only some limited questions, but that question itself is combined with the n number of things. And within the one question itself, we are able to know being interviewer either you have the really in-depth knowledge about that or you have the just some limited knowledge for that concept. So that's the reason
Right.
the question is there. Explain the meaning of fixed assets and give the one example with entries at each stage from purchase the fixed asset to till charge the depreciations in the books of accounts. So entire scenario other than
Mhm.
how you're going to do the sale of asset with profit, how you're going to do the entry for loss on sale of assets, other than that, from the since from the purchase to till charge the depreciations, how you are going to
Mm-hmm.
handle that 50% portion, more than 70-80% portion of the fixed assets is going to be covered within that one questions itself. In
Right.
addition to that, further question is going to be there. Once you have the knowledge about these questions, then the next question is going to be what's mean by the physical verification of the assets. If how you're going to prepare the fixed asset register, what data you are going to capture that. If you are going to sell the asset with profit, what sort of entry is going to be. So there are limit. If you given the answer for the first question, then the next question is going to be there, and the interviewer itself is going to be says that the boss, he is going to give the answer for that, and he also get the more interest to know more about your skill set, because he
Right.
already impressed from the first question itself, answer of
Yes.
that question itself. So
Right.
here it's going to take 3 to 5 minutes to answer for that questions, but it's not the one sentence, it's not the two sentence. So we have to
Mm-hmm.
speak up and we have to explain,
Right.
and we have to give the example for that as well. So explain the meaning of fixed assets. So here one question is going to be explain the meaning for the fixed asset. Second, we have to take the one example. We have to give the entry for that,
So
how
how
we are
can
going
we
to do.
explain the fixed asset?
So that what we have to explain is that the fixed assets refers to a long-term asset. The fixed assets refers to the long-term asset that are used in the operation of a business. They provide long-term financial benefits, have a useful life of more than 1 year, and are classified as PPE, that's property, plant, and equipment on the balance sheet. So here, what we have to explain the fixed asset, it means that's going to be used for the business from the long term standpoint, and from which we are going to generate the revenue in the future. And the lifespan of that assets going to be more than 1 year. That's the mean of fixed assets. And when we are going to capitalize that and giving the one example of the fixed assets, that's going to be if we purchase the machinery, then and what we have to do the entry, and irrespective of the machinery, whatever the assets we are purchasing, the first we have to park that into the CWIP. That's a capital work in progress. We have to debit to CWIP account, and we have to credit to respective vendor. And when we are going to do the capitalization of that assets, then
Mm-hmm.
we have to debit to that respective assets, and we have to credit to CWIP account. And why we have to park it into the CWIP? So in addition to the value of that assets, if any additional expenses going to incurred for that on that assets, or any time is going to be
So,
required for.
if someone asks why we are parking into the work in progress instead of directly charging to asset account,
Yes, I'm
how
coming
we
there.
answer?
I'm
Oh,
coming there.
sorry, sorry, sorry.
So that's going to be each and every assets we have to park in CWIP instead of straightway taking towards the capitalization of the assets, straightway towards the asset. Because if any additional cost incurred for that assets, we have to add that expenses with that assets itself. So till the time doing the capitalization of the assets, whatever expenses going to incurred, we have to capitalize that expenses with the assets. Giving example, if we purchase the machinery, installation charges is going to be required, and installation also the time is going to be required of 1 month or 2 months for the installation. So till the
Mm-hmm.
time our asset is not going to be ready for capitalizations, ready for put to use, we have to park that assets into CWIP. That's a capital work in progress, and depreciation is not going to charge on the CWIP asset till the time that asset is not capitalized, not ready for put to use. The depreciation is not going to be charged on that. So first we
right.
have to park in CWIP. We have to uh, add whatever the expenses incurred to see that asset is going to be ready for put to use, and then we have to do the capitalization. So your entry is going to be CWIP account debit to vendor account, or if installation charges as well, CWIP account is going to be debit to your vendor account. And then when you have the PUT certificate, put to use certificate, you are going to do the capitalization of that. And the entry is going to be your assets account debit to CWIP account, which is combination of the
Right.
3-4 line item. One is assets plus installation or any other charges incurred to see that asset is going to be ready for capitalizations. That all is going to be add into the value of that assets and credit to CWIP account. And when we are capitalizing, we need to.
So if it's a installation and other things, so we will charge to directly, means 5 lakh is for asset and 1 lakh is for installation. So how we will pass that entry, means for 6 lakh we will charge to asset. So
Yes.
we will show, means I'm asking that the installation or things we will show separate or not?
No. So how it's going
No.
to be work? Your
Uh-huh.
assets value is 5 lakh. Your
Okay.
installation is 1 lakh. So the
Mhm.
entry is going to be for this first is going to be your CWIP account debit to your vendor account credit. Again, your sweep account is going to be debit to your vendor account credit. Here, you are mentioning the asset name in narrations. That's XYZ assets. Value is going to be
So,
this 5 lakh. This is 5 lakh. Here as well, you are going to mention in the narration installation charges for XYZ asset.
right.
And here as well, that's going to be installation charges for XYZ assets. And when we have the confirmations, when we have the PUT certificate in place, put to use certificate, and that asset is ready now for do the capitalizations, our entry is going to be that XYZ assets account debit to CWIP
Right.
account credit. And this entry is going to be the combination
Uh,
of these two.
right.
And the date when you capitalize this, assuming if you have done the capitalizations on 2019 December 23, this asset is purchased on 1st November 23. Installation charges is around 30th. If you paid these on 15 December 23, and now you're doing the capitalization of that assets as on 19th December, your depreciation is going to be triggered from this date, not from this date, or neither from this date.
Right.
And this is your capitalization entry. And as and when you have done the capitalizations based on the life of that assets and the method which you are following, if you are
Okay.
following the straight line method, then on this 31st of December 23, if the life of these assets is 10 year, then it's per year the depreciation is going to be 60,000 and the per day depreciation is going to be 164.38. Then how many days you use these assets in December? It's used for 13 days. So your entry is going to be depreciation account debit to accumulated
Right.
depreciations account is going to be credit, and this entry amount is going to be your 164 into 13,
13.
21369. So this is the entry you have to pass into the systems. Following the month of every month end, you have to run the depreciations, and the entry is going to be this one: depreciation account debit to accumulated depreciations. Amount is going to be changed as per that month, and
Okay.
this is going to be reflect in your balance sheet towards your fixed asset, but this amount is going into the in negative, and the net block, this is your fixed asset and less accumulated depreciation. So net block or WDV for that asset as on 31st December in the balance sheet going to be present as of 5,97,863. But in trial balance, you are going to see the two ledgers. One is for your XYZ assets, that's a fixed asset, and one accumulated depreciations in negative 2136, and you have to club this both towards the, if XYZ is a group of machinery, then
So,
machinery.
okay, my doubt is in December we have passed this entry for depreciation, right? And
Right.
for January we have to pass. So, we have to charge depreciation on that amount, 5,97,000, right?
No, if you are following the WDV method for depreciation, that's
Yes,
the written down value, then
yeah,
you are going to charge the depreciations on this 5,97,863.
yes, yeah.
But
That's
if
I'm
it,
saying. So,
yeah,
okay. So, oh, mostly we are following that straight line.
yes,
Okay.
it's depend because that SLM method or WDV method, that's applicable based on the industry to industry, or
Okay. My question is
hybrid
that, so
mixed.
this okay, this 5 lakh, from where we will get that? For January we have to pass the entry, right, for depreciation on this 5,97,000. So from where we will get this amount, 5,97,000? We have to check the ledger, or we have to make a note in that.
Yes, in the system itself. From the systems, when we pull the fixed asset from the systems, in that report itself we are able to know that each and every asset wise details: how much is the charge, how much is the gross block, how much is depreciation charge till date, and what's the WDV value
So
in the
I'm
system.
asking that, it's a, if we are charging directly to that machinery account, means XYZ asset account, if we take the XYZ ledger, we will get the balance, right? So
Yes.
now we are charging to accumulated depreciation. So from where we will get that 597 amount, from which ledger, or how we have to check that?
So in system itself, the grouping is there for accumulated depreciations, but in the system itself, the fixed asset register is a design in the such a way. From that
Uh-huh.
report itself, you are able to get all the details. Whatever
So
the,
fixed asset register means it's in software, or we are preparing in an Excel.
no, no, no. So one is going to be captured from the system itself. So when you are going to pull the details from the systems, you are able to have all the details in that fixed asset register in the system itself. So in
Okay, there
systems,
is an option in the system for fixed asset register.
yes.
Okay, right.
So you will able to get all the details from the system itself. Fixed asset registers, that in the fixed assets, what's the invoice number, what's the your vendor name, what's your the basic value, how much you have added over there, what's the line items, how when you capitalize that assets, what's the life of that assets,
Okay,
and how much
for
is the
everything
fixed.
if
Yes.
we have any concern about this, we can check. We can get from that
Yes.
fixed asset register,
Right.
right?
Right.
Okay.
And you are able to get in how much is quantity there, where is the location of that assets as on date, where you have capitalized that assets. If you are going to do the physical verifications, what's the location, who is the
Yeah, like
custodian.
my concern is that, like you said about that outstanding and other things, we are preparing the means one schedule for that. So when we look
Yes.
that
No, no, no,
Excel
no.
sheet, we will get an idea. So like
Right.
for fixed asset, what we will do that. That's my concern.
But here as well, there is a one twist. If
Uh-huh.
if it's in ERP, you will able to get that fixed asset register from the system itself. But if you don't
Okay.
have the ERP, and if you
Mhm.
haven't implemented the FA module for capitalizations, then manually we have to prepare the fixed asset register. If
Okay.
we have the limited assets, hardly just less than 1 CR, or only for limited computers are going to be there, not more than that, and we are into service industry, we don't have that much assets, then, and if we don't have the ERP as well, and if that FA module is not implemented, then it's going to be have the little bit difficulty, since we have to prepare manually that fixed asset register.
Okay. After explaining this, could you give just a basic idea about that fixed asset register
Yeah,
after
yeah,
this one?
sure, sure. We
Yeah.
have the fixed asset registers prepared manually, and we'll explain
Yeah,
you
means just
for that
explain.
as well.
Okay.
How you are going to, how you have to prepare for that, and what details is going to be
Right.
captured in that registers, and how that register itself is going to be give the uh, more details to do the capitalization of the assets, calculate the depreciations, and we have to prepare the uh, FA reconciliations as well. Whatever we have the
Mm,
fixed asset balance, that need to be or must to be matched with your FAR, fixed asset registers. And when we are going to do the when we are going to do the physical verification of the assets, we are going to do based on the fixed asset registers, not on the FA schedule. In the FA, you are able to see the total balance of assets is 1 CR. But what assets added into that 1 CR, how many quantities we have, which sort of asset is there, A asset, B asset, C, D, S, P. So we will able to get all that from the fixed asset register, as like your accounts payable. You have the
mm,
aging report in
right.
balance sheet. In GL, if you are looking only, you have the accounts payable as a one number, but how that number is combined, if you need to get the vendor confirmations, you need to know how that account payable balance is derived. So when you are going to see the backup details, you are able to know that 100 vendors clubbed over there to have this
Mm,
balance. So similarly, you are able to see the machinery as a balance, but how many assets added into that? How many machinery added into that? On which location that asset is? What's the life of that assets? When we purchased, that all you are able to get details from the fixed asset register. That's the FA schedule, and that need to match with your FA balance in the balance sheet. And then FAR versus physical verification of the assets. That's again going to be the different aspects. So that's also going to come into the pictures. And when you are going to see into the physical verification of the assets, might be in the books you have the 100 quantity of the assets, but when you are doing the physical verifications, you are going to end up to have only the 90 or 80 assets. Then where we have that remaining assets, then we need to do the further analysis for that. And if that
right.
assets is not, then we have to take the entry into the books. Then how we are going to do? That's the secondary. So this is
Right.
all related to these questions itself. This is going to be how the answers for the depreciation account, how we have capitalized, how we have done the capitalization from the CV, how we are going to pass the depreciation entry. When the straight line method is there, then it's going to be straightway the number of years life divided by that assets. And if it's a WDV, it's going to be calculated on the written down value. So that's the way your capitalization is going to be work from the purchase of the asset to till charge the depreciations on that.
Yes. Right.
So That's the way we have to speak up within the 5 minutes from the
Yeah,
end
that's
to end.
very very clear. Yeah, correct.
Yes. So that's there. So let's connect on the second link. We'll discuss more
Yes,
about the next aspects of our fixed assets.
right. Okay.